Hello, and welcome. If you've ever felt a little curious about the world of trading, you've come to the right place. Think of it like a massive global marketplace that never sleeps. In one corner, you have the foreign exchange market, Forex for short. This is where currencies from different countries are traded against each other. US dollar, Japanese yen. It's the largest financial market in the world, driven by everything from national economic health to international politics. It's like watching the economic heartbeat of the entire globe, with each beat rippling across currency values. On the other side of this marketplace is cryptocurrency. Crypto. Built on blockchain, decentralized, no single bank or government controls them. Prices move on tech updates, investor sentiment, and real-world adoption. Forex, the established giant. Crypto, the bold challenger. Different behaviors, different drivers. As we look ahead to November 2025, will markets climb or turn down? This guide breaks it all down. Before we dive deeper, let's get comfortable with two core terms: bullish and bearish. Imagine a bull charging forward, horns pointing up. When traders are bullish, they expect prices to rise. Optimism drives buying. Strong economic data or exciting news can fuel that optimism. A bull market is defined by rising prices and growing confidence. Picture a bear swiping its paws downward. That's a bearish mood. Traders expect a downturn, sell to avoid losses, or use strategies to profit from declines. A bear market is prolonged weakness and caution. These terms capture overall market mood, a powerful context for every move. You can be bullish on Bitcoin or ETH after an upgrade, and bearish on GBP USD after weak UK data. Crowd mood scales into real buying and selling. Bullish crowds can push beyond fundamentals. Bearish fear can trigger sharp drops even in healthy trends. For November, what's the dominant mood in crypto and Forex? And what factors are pushing traders to think like bulls or bears? The crypto market is famously sensitive, and November 2025 looks no different. Regulation remains a top driver. Clear, fair rules are bullish. Hints of crackdowns or bans in major economies can spark bearish waves. Watch the US and Europe. Their decisions echo worldwide. Technology upgrades can be powerful catalysts. Faster and cheaper transactions often attract buyers. Delays, bugs, or security issues flip sentiment bearish fast. We'll watch for scheduled hard forks and protocol upgrades next month. Adoption headlines. Big companies or banks integrating crypto act like a vote of confidence. Strong adoption often creates bullish momentum. The more crypto shows up in daily life, the more its perceived value grows. Broader economy matters. In risk-on, speculative assets thrive. In risk-off, they struggle. High rates and recession worries push money into safer havens. Many Forex moving reports also affect crypto, sometimes with a lag. In short, watch regulation, tech upgrades, adoption, and macro tone to read November's crypto mood. One story dominates: the impact of newly approved spot Bitcoin ETFs. ETFs let mainstream investors gain Bitcoin exposure in regular brokerage accounts. It's a game changer, overwhelmingly bullish for crypto. Even small portfolio allocations can create sustained buying pressure. Strong, consistent inflows in November would be a powerful bullish signal. Institutional products and SEC approvals add legitimacy and encourage wider adoption. More firms may add Bitcoin to balance sheets. More stores accept it, reinforcing value. Near-term risk. If inflows slow below expectations, sentiment can turn bearish. That could spark a temporary correction despite a bullish long-term ETF effect. Month-to-month performance hinges on sustaining momentum in these new funds. Bottom line, in November, watch daily ETF inflows and headlines. They will set the crypto tone. Forex is less volatile than crypto, but driven by many moving parts. Central banks set the tone via interest rates and guidance. Higher rates attract foreign capital, boosting a currency. Watch upcoming Fed and ECB meetings for hints about future policy. Hawkish Fed signals are bullish for the dollar. Dovish shifts can weaken it. If the ECB leans toward cuts amid slowdown, that's bearish for the euro. Cross-country rate spreads drive currency moves. Key reports act like a report card. CPI, non-farm payrolls, GDP. Strong data supports higher rates and a stronger currency. Weak data does the opposite. In crises, investors sell risky currencies and buy safe havens. USD, CHF, JPY. The US dollar, the world's reserve currency, often sets the market's tone. A stronger dollar can pressure gold and crypto. Elevated US yields versus Europe and Japan have kept USD strong. November's USD hinges on Fed tone and US data. Even crypto traders should watch the dollar. The most obvious difference is volatility. Crypto swings wildly. Forex moves more gradually. In crypto, double-digit daily moves happen both ways. Newness, speculative interest, and lower liquidity amplify moves. For November, crypto's bull case centers on sustained ETF inflows and rising legitimacy. But sharp bearish corrections can arrive on negative regulation or weak inflows. In Forex, a 1% daily move in majors is big. Trends follow macro forces over months. Crypto is driven by technology and adoption. Forex reflects national economies, rates, and inflation. Crypto offers high upside with high risk. FX risk comes from leverage and macro pressures. Crypto bullish signs, strong ETF inflows, and major adoption announcements. Bearish, regulatory actions or security breaches. USD bullish, hotter than expected CPI and hawkish guidance. Bearish for a currency, surprise rate cuts or shrinking GDP. Learn to filter noise. Connect data points across markets to see the full picture. As we step into November 2025, both crypto and Forex face pivotal moments. For crypto, watch spot Bitcoin ETF inflows and whether big institutions are still buying. Track major US and European regulatory headlines. Follow significant tech upgrades and adoption news. In Forex, mark the next Fed and ECB meetings. Read statements and listen to press conferences. Pay close attention to CPI and non-farm payrolls, primary movers for the dollar. Remember the dollar's inverse pull on gold and crypto. Think in bulls and bears. By understanding ETF flows, blockchain tech, interest rates, and inflation, you'll read the stories the charts are telling. May you navigate the markets with clarity and confidence.